I trade me personally. I trade the power of three, right? I'm gonna keep repeating this to everybody get it down packed, bro. Because the shit is so simple. Like it's the simplest. It's the simplest strategy once you backtest it enough to the point to where you can just use this and that be it because you know which session does what at what time, all that good stuff. It tells you what session to trade, what not to trade, etc. Right? So you got once again we got accumulation. Keep repeating it over and over again. Accumulation. You gonna have manipulation. Man, distribution to the downside. Now, if you trade New York, I trade London because I'm trying to catch the high low of the daily candle, right? But if you trade New York, your job is to find and draw liquidity. If we're supposed to go lower and distribute lower, your job is to find wherever where price wants to go in that moment, right? So for today's example, we had previous day lows, previous week lows also down here between both of them. So we got previous week lows, previous day lows, right? So this is your draw liquidity. As y'all seen when we was live today on in a live trading session that I did, my target was previous day lows, and they got obviously got hit, right? So we gonna go over New York session today because that's what I traded. I'm not gonna go over London session. I traded London, but I'm pretty sure none of y'all trade London. So we're gonna go over New York. So when I'm looking at this is the setup I took, but when I come in before I come into New York, I'm looking at what did London do? London didn't do anything, right? All we did it was no manipulation. Asian session trended, so it was no. Wait, am I in the right area? Today's the what 24th. See, I'm not even in the right. I'm tripping. Am I tweaking? No, I'm not tweaking. Hold on. Damn, where I just go? Damn, my whole thing just went away. All right. Anyways, let me go back to what I was doing. I just looking threw me off hella. Oh, I was on the wrong day. All right. So New York session, right? So after London session manipulates or does whatever it's supposed to do, your job is to come into New York, find your entry model, and find a draw liquidity. So obviously today, draw liquidity was previous week lows, previous day lows. So we're going to today's session. London session did no manipulation. We swept Asian lows and Asian highs. There was no manipulation. This was some sloppy price action. But usually London session puts in the high of the day or the low of the day. Usually. Now 7 times out of 10, London session is gonna put in the higher low of the day. So if we look over here, we compared it to indices. I'm pretty sure it was an S&T. See, we got an S&T. So as you can see, this midsection right here, session in between the two sessions, this high got taken out on ES, but not in Q. So this is called an S&T. Divergence, a divergence between the two indices. What is the S&T gives us? S&T is basically saying that it's a sign of a reversal, basically. So the model that I use is I like to get an S&T. So we would have S&T, market structure shift. We pull back into a PD array, which is like a breaker, and a Ferrari gap for a unicorn model. And this is the model I take. So I'll go CB right here. Got the breaker right here. As long as your model shows up in the direction that the market is going, the higher time frame is going, you're going to be good. Seasonality wise, you're supposed to go lower. So your obvious draw liquidity would have been previous week lows. They didn't get tapped into last week. So this week They got targeted because we were supposed to go lower. Your max draw liquidity for me personally is gonna be, where the fuck is previous month lows? Hold on, so damn. It's not gonna show on this time frame. My max draw liquidity is previous month lows. So I'm already bearish, and my setup showed up in a bearish setup, right? And we had the SMT. The SMT confirmed the reversal. That's how I knew it was time to go short for shorts. Let me see if I can find my exact entry on here so I can show y'all. I entered on ES. Fuck. So on a 1 minute time frame, we got this breaker right here. As you can see, price came back up into the breaker, and we used the true session openers. If you want a premium, y'all know I taught y'all that you can use like midnight opening prices as support and resistance. You can use the true openers as support and resistance. So you got the SMT on a 1 minute. You got your breaker block. We came into that breaker block, and I went short. We had an SMT above true day. So if you ever want to catch the higher low today, me personally, I like to have an SMT above or below the true day opening. It depends on if I'm looking for buys, for the low today, I want to see SMT below. If I'm looking for shorts, I want to see SMT above, and that's gonna tell us if it's the higher low today. And as you can see, we had that SMT above the true day opening price, and that's why I knew to hold this trade. One, the draw liquidity is lower, obviously. Let me not say obviously, but obviously the draw liquidity is lower. We had an SMT, so that's two bearish signs, right? Two bearish signs that I need to go short. On top of those two bearish signs, if we clear this out, back to the basics, you have a market structure shift right here, or right here, whichever one you use. I know this stuff is kind of this kind of we see different high and lows, right? But for me personally, this is my market structure shift. So we have an SMT, which is confirming a reversal. We have a market structure shift, which is confirming a reversal, and we are above the true day opening price, which all confirms a reversal. So we had our boom right here, breaker right here, and we use the true day opening as resistance. I use as resistance. Enter the trade. When you manage your trade, you go to the 15-minute time frame, so you don't start shitting your pants because price is fluctuating on a 1 minute. A lot of people don't like seeing price move around, up and down, up and down, up and down. So if you go to the 15-minute, you manage them on the 15-minute, you get your 5-minute entry, you're going to be fine, I hope, because all you see is bearish candles. You're not going to get scared of seeing this drop right here. It's nothing that should make you pull out of this trade right here. It don't get no simpler than that. I'm not gonna lie. Like, literally, I don't know what else to. I don't know how to make this simpler. You put your deviations on for the people who I've taught them so far of the London session range. You target -2, -2.5. You target the relative equal lows right here, or you target the max expansion and deviation right here, and you're valid. Or you put it over the whole session's range, and then you target the max expansion -2, -2.5, which I think we're gonna end up dropping again into this -2, -2.5, or even come down to the max expansion before re-expanding back, retracing back to the upside. But my draw liquidity is those previous month lows down here. I wouldn't say for ES, but for sure, I would like to say previous month lows for NQ, because we are only as of now we 2,700 ticks away. NQ could drop 1,000 ticks off open in 1 day. So it's like, this is not unrealistic. This is actually this is really, really close for draw liquidity for NQ. And another thing I want to show y'all before I get up off here, well, before I start answering questions. Somebody said something. Your profile about Josh, you could have caught longs. You could have caught. I wasn't looking for longs, so I can't even tell you. Oh yeah, no, you couldn't. I wasn't looking for longs today, so I wasn't even trying to give an analysis on longs. I was more so looking at shorts for the whole day, like for the whole entire day. I wasn't looking for longs. Now, hold on, because this shit is tanking. Yeah, take out previously lows. All right, now, all right, now I want to show y'all something right quick, right quick. Let's see if I can find it again. What was this? Thank you. All right, so now say if you missed this, right? Say if you missed this drop, this is an expansion. You got your reaccumulation, and then you got an expansion again. Now, let me see. Market closed at what, 5 o'clock? So you had until right here for these shorts right here. So that's still another 900 ticks, right? So say if you was trading right now and you was on the hourly time frame, right? You have a breaker right here. This breaker is very important. It's a time PD array. So you got this breaker right here. I'm gonna show y'all why time's so important. Mind you, the draw liquidity is lower, obviously. Well, let me not say again, not say that because a lot of people don't know that. But I wanted us to go lower. So we got this breaker, and then we got this fair value gap right here. Let's make that 9. Now, I like to do stuff like I mark out the time my PD arrays was made, and I like to add them together. So if you take this breaker that was made at 4 o'clock, take this 4 o'clock breaker and it's 9 o'clock for value gap, you get 14. If you convert 14 into New York Standard Time, that's 1 o'clock. So if you was to go on this chart between 12:55 and 1:10, you would have got an entry for them shorts. So what this is doing is giving you the time that the PD arrays will start the reaction time for the shorts. So if you look right here, this 1 o'clock candle is the reaction candle that started to move down, and I got that. I entered between that macro because I added the times between the breaker, which is 4, and the fair value gap, which is at 9 o'clock. You add them up. Remember, you add them up, you get 14. 14 in New York time is 1 o'clock. 1 o'clock was the reaction time for these shorts right here. Very. I'm not gonna say simply easy because that's kind of that's not simply easy to remember to do. But yeah.
Mario.
Who's this?
14